Hello and welcome to Macro Mondays presented by the Gokhstein News Network. I am your host, Landy. Today is November 3rd, 2025, and we're looking at Bitcoin here on the index chart, not the Coinbase chart, to start today. I hope that you watched the Saturday night special that I did breaking down, the monthly and the daily compression and the weekly compression that's happening with Bitcoin up near the highs here, and the opportunity on deck for both the bears and potentially the bulls if the lows do hold. Now, I wanted to take a look at a little bit of a different view of Bitcoin here, and this is going to be the volume or fixed volume range utility. And not utilizing the entire range. You typically will see a lot of analysts will have the VPVR, which shows volume for the whole range, and it adjusts as they zoom in and out. But I wanted to show the amount of time that Bitcoin has been accumulating at certain levels in comparison to last cycle. So for right now, Bitcoin has been in the high side structure since really the breakout of kind of 112 and then kind of messing around in this area. But I kind of just pulled in the candle break low. You'll see that, of course, we came down and tested into the 98 to 101 range. And then, of course, we had already started to see some trading above to around 112, right? And from there, we saw some high structure emerge to the 123, the area at just shy of 125 at 124.5, and then, of course, 126. Some of you might recall that back over here, when we were originally consolidating, we had the 108.4 to the 109.360 high. We saw Bitcoin was holding right around $89,000 on the low side. Once it was lost, we saw that area 89 seen as resistance and then falling through to hit 74. Here on index, right around 74.6, 74.5 to 6, but realistically on spot, it was more around the 74.4 range, which is essentially a test of the top side over here. One of the main reasons that I'm looking at this as in parts from the initial break of the highs here to the current price action and the prior ranges here with the retests and all of that is to show how many days of accumulation we've seen, what the price structure looked like. So like where was Bitcoin being heavily traded in terms of volume for buyers and sellers. That gives us a point of control, which is the highest volume traded price for each area. Which, by the way, if you were to pull the whole thing up here, you're going to find that it's going to generally come in around $95,000, $96,000, depending on your chart. But that's neither here nor there for this structure up here. But I also wanted to show how long Bitcoin has been trading above the prior all-time high at $69,000. So from the candle break, we had the initial break up, but the actual break that led to the move, we've now had 365 days of trading above $69,000 here. Why do I point that out? Well, because, we've had, of course, a lot more time above the $20,000 range back here in the prior cycle. So if we were to look here, right at about the $19,800 to $20,000, we had a lot of time that we traded above it, but we didn't have a lot of consolidation for price structure. And that's where we had, some shorter stints of accumulation and in certain ranges. For instance, these green bars aren't supports or anything. They're just me pulling the dates and just to find how many bars or days Bitcoin spent at a particular price. And in this case, we spent a total of, one of the main key areas that we were watching at the time, right around 100, right around 20, $26,000 to $28,000 here. Was kind of a key level because we saw some breakout structure on the way up and then a consolidation. And that was kind of the first big area, right? So we had this kind of come in at around 42 days. So, just shy of 4 weeks, or just over 4 weeks rather, of price action between, essentially 28 to, 42. Then we saw 101 days. Then we got another little bit of price consolidation over here for about 80 days. And then, subsequently we saw a little bit more for another 65 days. And I'm looking at the downside areas of just, below the high side structure here, right? And then come back and test these areas, so on and so forth. And then you get the aggregate days for accumulation in certain areas prior to kind of breaking down. We saw another 48 days. We saw then more accumulation in the bearish structure, though, headed towards an area of interest that had, about 120 days of accumulation. And even less volume on the low side structure, which is why when 28K broke down, we saw the big move down to the next major level, which was the prior all-time high. But you'll notice that there's not a lot of structure here until we got to essentially 17 to 10. But realistically, we had like the 12 to $17,000 area. And of course, we had the high over here just under 14 at 13.8 to $14,000 on spot price. It was right around 14,000. And we saw that price came down and hit the 15.5, right? So the biggest thing is after losing larger areas of consolidation structure, we saw that price came down and actually did the reclaim of the prior high side structure where we had some weekly closes. We had a little bit of price structure here. And a little bit of an accumulation here as well with prior to the breakout above 15.5 here, right? So that was on the way up. So we did have some price structure. So, but there wasn't really any price structure below 28. This was it, right? Just this little bit of consolidation here, about 10 days, a little less than 10 days. It was really 8 days of price structure that was built in there. So when it ripped down to find the next level of price structure, that's why we got the reclaim of the prior all-time high. And the reason that I bring this up is because there's a lot of hand-wringing around price action right now. And if this was the top or if it's not, and I mentioned on Saturday that, last cycle, I showed you that I was very adamant on the timeline. I called $69,000 to $70,000 about 42 days before it actually hit. The day before, I said it was going to go to $69,000 to $70,000, and I was going to go all in short at the all-time high, and I did. And then subsequently later into the bear, once we had started the bear market, I called the breakdown when we were trading at 28. I called the breakdown to $15,000 to $16,000 and was very confident. And then, of course, the day of when it came in, I said, I believe the post was 16,472 or 476 is the low. I'm all in, see at 100K. Well, why haven't I called the macro top yet? And why am I okay not calling the macro top? And I'll wait for market structure to actually say, yes, that was the macro top after a market structure change. And it's because of the amount of time that we've seen in consolidation in specific areas. And you can take, level by level or the entire structure. I like to use the entire structure from the breakout high to the retest. So that was the breakout of this range over here where we had the new high prior to the all-time high. And that's where we had, the 74 or 73 to $74,000 prior to the halving. We had price structure come down and hit the ETF highs, which was this structure over here, where we did have some accumulation structure for about 73 days. We saw the high coming in at 49. We tapped down 49. This was, coming into the 10th, which was, 10th to 11th, which was the launch of the spot ETFs, which is different than last cycle. We didn't have spot ETFs last cycle. We had futures ETFs, so they could hold cash. They didn't have to hold collateral one-to-one. And, prior to that, we had 39 days of consolidation just above the very long accumulation of about 220 days from 25 to about $35,000, which was a big monthly level. At $35,000, we started to accumulate for another 40 days. and then accumulated above that level for 73, and then accumulated for 268 days, and then we've gone on for 196 days up here, after breaking the 69,000, and then of course the new all-time high at 74, essentially, 196 days, and then now another 165. So there's really solid, like, logical price structure below price action right now. And we can see where the current pivot is for the current range here. You can see that that's going to be right around the $112,000 range right here, which is a major weekly level. So we've seen the most volume traded in and around that level, from the bottom side to the top side, finding support in that area, losing it down to a what's called value area low. And, we're taking 70% of the total aggregate volume is going to be between this low area at value area low and a value area high. And then we get thinner liquidity down here to the next bigger area. Right now we're just kind of sitting around some dailies at 105, right? But that's going to be now encroaching into some of the liquidity that's in this area over here, which you can add up, right? And that's where we can mess around with a few things now that Bitcoin is below its value area low and inside and sitting right around the value area high of the prior range. Around the top side, essentially around 104 to 106 up here. We can actually now pull this structure over. So we can take and we can hide this one for a moment. And we can actually get some good solid statistics for this range low into this range's highs volume right here. So pull the two volume areas together. And I know that this is not typically the way that you're going to see a lot of people do it, but I'm trying to illustrate a point here that this is a very big, important area above the prior all-time high. And what you'll see is that directly below price, what we find is a very high volume node around the highs that supported this higher low structure prior to the breakout of this $112,000 high, right? Because we trended down right into this area where we found this low, which was right on the top side of this volume coming in, right into the point of control, nearly to it. Now, this was 98 to 101 on the weekly and the daily, of course, on this low. So essentially where Bitcoin is sitting right now is on a high volume area. The next highest volume area is going to be right around the 101 area, right there, which is this daily level, which is also a weekly close open, high or low, right? And that's going to be right around this next node of volume into the actual $98,000. So 101 to 98 is right around the top side of the highest volume area of the prior range. And then we have the point of control, or the highest volume traded area at right around $96,000. You can call it 94 to 96. Some people will split the difference, like myself, at 95, because some derivative exchanges and some spot exchanges will be ever so slightly different. And then some people just like the aggregate index for it. But in this case, if that area was lost, where do we look? Well, the next bigger area that we're going to run into is going to be right around $89,000 to $90,000, right around the low side of this structure. Of course, there is some weekly closes at 93.5. Many of you already know I've talked about that quite a bit. That'd be outside of the value area low of this entire structure up here above $69,000, right? And then the next biggest area would be right around the upper 80s, $88,000, $89,000 for the next big node. And then, of course, we get down to 85, so on and so forth. And the reason why I'm pointing this out is because when we go over and we look at the actual charts, and this is just, kind of illustrating where Bitcoin is right now. When we look at the actual charts, right, it's going to line up very cleanly with some of the levels that we've talked about all along, because it should. It's based, the price action is based on an auction where we have bidders and we have buyers and sellers, or we have the bids and the asks and the spread between them and the movement to where the most bids are and the most asks are, right? And on the short side, when somebody's short and they are closing their short position, they're putting in bids to close that, right? So they're essentially buying out the other side of their position on the close side. And on the long side, you get, asks on the other side to close that position. And then you have pure buying and selling, or just fresh liquidity coming in with bids and asks. So we're right on a major level. This major level that I've talked about is at the 105 region. If we do drop it, this area, we're going to head back to the low right around 103.5. Could we get a swing of it without hitting the next weekly at that 105 to 98? Sure, absolutely. That is a possibility. But more likely, if we start closing below 105, we're going to head to that 103.5, 103,650 area. And if it does start to break down or trade below there, we are going to see Bitcoin head down to the 101 to 98 area. And that's where the rubber really hits the road. That's where the bulls need to hold up price, or else it will fall to the next major area. And this is where I'm going to turn off this local 2 and go right back to our previous local areas. And this is where we saw this price structure over here. And it's funny because you could just go to the left here and you can see how price reacted, right? But this was the price structure when we were mapping it out over here for support and resistance areas of interest. And that's where we start looking at this area again, right? And that's where we've got right there at right around 90, the upper 95 to $96,000. You saw all of the trading here during the compression prior to the breakdown through the supports here, which on the daily was 92 to 89. Essentially, it was 88.7. That turned into, of course, resistance. This is also a major fib level at the 1.168 or 16.8% above the prior high. And then, of course, we start looking much further down if that breaks down. But you see the mid 80s. This was post-halving expansion. The big post-halving expansion move up. This is the first bearish candle swing low. We also had the close open right on the bottom side of the range, defining this low side, and this high side right at a major fib. Was the actual bearish candle, right? It was the close open was essentially right at the 88.7, which is right on the 1.168 from the prior cycle. And that's 16.8% above $69,000. And the swing low is 85, which acted as an inflection point in lower term timeframes, especially right around this consolidation before the move back up. Now, the big point about this is we would have to then look into this zone of interest, much like we did at that time, while also calling out the weekly, which is at 93.5 to the 80, 87, 89 area, which was essentially this line right here. This white line is that weekly. This was the weekly close open high or low, right? That's at 93.5. That came in during this candle, the candle structure over here. That was the weekly to the weekly low, which was at essentially 89, right? So that's where we would have to reference this structure if we did see a break back in, and especially below 101, right? And we would have to see 98 dropped as well. And 98 would put us on the top side right here, in fact. So after the 93.5 reclaim, and then, of course, grabbing that POC, trading above it after stepping around the weekly here and holding on to that 93.5, we saw the point of control for volume of that range, essentially this compression over here on the low side, start to hold up. We hit 98, right? And then started to move to the top side, right? And then eventually we moved up above the 109,360 to make our new all-time high, exactly where I was calling it there, at 112. We saw that consolidation. My next big area was hold on to the weeklies here at 101 with that low at 98, 225. And then we were looking for 123 to 125. We got our 123 there. And on Coinbase, essentially, we hit our 125 call at the 124.5. And of course, we went for a little bit more. The next big area above 125 would be, anywhere between there and 128, 130, which is the 1414 up here. So we got the 126.3 here. Essentially, the 123 to 125 call satisfied. But I'm just calling local tops and bottoms at this point. You're not going to hear a macro top come out of my mouth until we actually get confirmation this cycle. And I know that's frustrating for some, because you look to my prior history where I was very, very adamant well ahead of time about when the highs and when the lows were going to come in on a macro time scale. But as I've shown you, the picture is changing in terms of amount of time for accumulation at each level. And of course, I would tell you that if $69,000 is lost, we're going to go significantly lower to hit some major areas of interest from both last cycle and this cycle in the $50,000 and possibly even $40,000 level. But it's more about watching the macro price structure, and I'm willing to be late to that call for confirmation, because we do have so many things. The biggest thing that gives me pause about all of this right now is that we have not seen quarterly expansion yet for Bitcoin. And look, it can also get an entire bear market and still be in position for that quarterly expansion. So don't get it twisted. Like, it is one of those kind of situations. So if we go here, and we'll just go ahead and take this off here, and we'll get rid of this for a moment. And really, it's about the quarterly. Not seeing this quarterly expansion just yet is what's giving me pause. And I'll show you just again here. It's no quarterly expansion, meaning that we can literally come down to the mid 50s, 60K around the basis, put in, higher low structure, and then, come back up and rip to the upside. But that could be an entire bear market, right? You could get 4 quarterly candles that come down, like some that go sideways, a little bit down, and then stair step down, boom, up as the basis rises, which could, be around 60K, right? Or, get a big dip below into the 50K region and still not hit that quarterly expansion. Just keep loading it up for the next big quarterly expansion. You get 4 quarters in there, and that's a full bear market, right? That's a full year bear market. I would think that it would be a little bit milder if that were the case. And I would be looking to some of these key areas on the quarterly to act as support in this compression phase. And that would be around the upper first, somewhere in the mid 80s, possibly even dip into the low 80s. And if we did see a price structure breakdown, from the monthly time frame, that would be a bear market, right? And in this case, that would be, coming back to somewhere wherever the basis is, currently in the mid 50s, possibly throwing a swing below, or maybe even a candle close below like we did last cycle, which would probably put us in possibly, I think getting below 50 would be tough, but it could possibly push down to the $48,000 area where we saw some of the high side structure from the 260-day accumulation. And then of course the 80-day accumulation, and then the accumulation from the spot ETF side of things as well. So there's a lot of price structure in and around there. And it doesn't mean that it's going to get hit, but it does open up the door. And just as viable on the other side is that this decides that, you know what, we're going to take a quick dip down and then come back up and start closing above the upper second and upper third. Now, that's in and around the $150,000 area, right? And will likely keep moving up. But it doesn't matter anywhere below 116 on the quarterly, right? We have to see closes above the upper second to start even entertaining expansion, and then closes above the all-time high would be the next criteria, because you got to get above there while maintaining the upper second standard deviation on an expansion to actually get that to kick off, see the lower first drop off the map, and we get quarterly expansion for a couple quarters, and we have yet to see that. Right? These are the reasons why I have not called a macro top. This was very easy last cycle between the monthlies, right? We got our quarterly expansion, right? And then we got our rejection, and then this brutal spinning top, inverted hammer doji here on the quarterly. It was very, very obvious what was going on here for the quarterly time frame. And right in and around there is where, we saw Bitcoin, of course, hit that upper second standard deviation. I showed you how I got my $69,000 to $70,000 call last cycle well ahead of time. That was why. That's going to lead the quarter. And of course, watch the monthlies this month. I told you on Saturday what the criteria is going to be. That's going to be any closes below this swing low. Now, you will get a technical confirmation below the closes here at like 107.5, but it's really about the 103.6, 103.5 region, getting the close below. We'll lock in this high as a consolidation high, and then looking to come back to somewhere around the basis. Oh yeah, that's right around that daily level and weekly level that I talked about at just in the upper $80,000 to $90,000 range. So Bitcoin could even put in a higher low there. But it's very close to this last higher low at 82.5 and 74,420.69. And if that were to happen in the bearish fashion, you should not be upset about it. Cheaper sats are going to become more and more rare as time goes on, especially whenever we do eventually kick off that quarterly expansion to the upside. So understand that when we kick off the quarterly expansion to the upside, it's going to be wild. So you better cherish cheaper sats when they come. And don't look a gift horse in a mouth and like all those other anecdotes, right? I'm going to leave you with that for this Monday. I know I didn't talk too much about anything else like the weekly structure, which looks like crap, or the daily structure that looks like crap. We had a little bit of an uptrend, and now we have a trend reversal set up to a we didn't close below the low, so we didn't close below 106.350 here. We closed right at 106.6. So there's nothing doing here. If we get that expansion to the downside, just watch for that to possibly lead into the weekly. I'll check up on this on Wednesday. You really don't want to see things trading below 105. That would be weekly expansion, especially closes below. If it does trade below on the daily, you want to see it get picked up and close above that lower second. Otherwise, it will be expansion if we haven't already hit the 101 to 98, and then possibly more on the table to that, midpoint 95, 96, and then 93.5, and then of course the $89,000 to $90,000 range, which I just showed you we have confluence with the monthly basis span. So head on a swivel, watch each and every week very closely while we're in this Q4 timeframe, and I would argue even into Q1 of next year, but we're likely looking at some things confirming here in Q4 as to whether or not we are going to get a high painted on the monthly, and or whether this is going to go back and try to rip to the upside and take out the highs. So we're likely going to see that start to really paint its picture this month. So keep a close eye on it. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe, and of course, as always, stay safe. With all that said, Landy out. Take care. Please like and share, and I'll talk to you on Wednesday.